All right. What is up, traders? What's up, tycoons? Super excited for today's video. We're going to go over something very important, something I like to call the market pulse. And basically, this is a good metric to measure and understand the movements in the market. Okay, so what we've got is the S&P 500 futures over here. Then we've got the US dollar index, the Dixie. We've got TNX for our 10-year treasury yield. We've got TLT right here. Then we've got gold and we've got crude oil. Okay, so basically, we're getting a view of the broad market through the S&P 500 futures, and we're paying close attention to the dollar because the dollar affects equities, okay? We'll go over the relationship between those, and then we get a peek at the bond market through TLT and also treasury rates and treasury yields through TNX. And then crude oil, all right, obviously is going to be important for energy and monitoring oil prices, and then gold here. So we really go over everything, and we're going to break down the intermarket relationship between these. As you'll see, a lot of these have very inverse relationships. So as some of these are going up, it's going to result in some other things going down. And so whenever you think you see a setup somewhere, and you can actually look at some of these other instruments to really get a pulse on the market and tell, hey, well, why all of a sudden did things just reverse, or why did we just skyrocket? And it can be because one of the things on here, maybe the Dixie, maybe the US dollar, or the 10-year treasury yield, just had a dramatic move in a certain direction, and that's going to affect things like the S&P 500, things like TLT and gold. Okay, so you're going to want to pay attention to these things and start learning these things. We'll go over that in all of today's video, but as always, the content provided on the channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. You guys can join the Investment Intelligence Discord using the link in the description below. These are all of the plays that I'm in right now. All right, that's where you get access to all of the different trade ideas, all of the different resources available to you guys. Every chart that we go over, even the custom indicators and scripts are available to all of the members in the Investment Intelligence Discord. Okay, that's also where you can see how we structure these really nice day trades to get really nice returns. Scalping the S&P 500. If you don't want to pay, that's fine. I've got a free newsletter for you guys, giving out free valuable finance content, free trading content, and I also try to sprinkle in 1 or 2 trade ideas for free, directly to your inboxes. You'll get those every single week. I've got a really nice one coming up. Some really nice ones coming up. I try to put high quality trade setups in this newsletter. Okay, so I'm not spamming you guys with a million different tickers and then saying, oh, look, 2 out of these 10 worked. No, they're high quality setups. This is what they'll look like. Okay, going over the chart conditions, some of the targets, the things to pay attention to, as well as showing the chart and where we think things could potentially go. And you can see how this rising wedge here played out very nicely. So if you're fans of free valuable content and you like free trade ideas, you want to get those sent straight to your inbox, sign up for that newsletter using the link in the description below. And we'll go ahead and get into the market pulse. So remember, the market pulse is going to be looking at the S&P 500, bonds, gold, the US dollar, treasury yields, and oil. Now, if we look at the relationship between the dollar, okay, so this is going to be the Dixie, the US dollar index versus SPX, the S&P 500. We've got the S&P 500 here on top, and the divergences are very, very clear. Now, what is a divergence, you may ask, right? Well, a divergence is simply when they're doing something different than the other. So when they both are moving up, right, if this is moving up and this is moving up, they're not in a divergence, okay? And in this case, you can see here the S&P 500 is in a downtrend as the US dollar, the Dixie, is in an uptrend, right? So these have an inverse relationship with each other typically. And what you can see is that as as one goes down, the other is going up. Now, it's not a coincidence that the stock market bottomed in October of 2022. And we also saw the Dixie, the US dollar, top out in October of 2022. And you can see once that dollar started its nice downtrend, the stock market started rallying. Now the stock market pulled back here, and look at what the dollar was doing. The dollar was rallying, and most recently at the time of this recording, the dollar has been dropping, and this has been a tailwind for stocks, helping push it up higher. So, this is one reason why the Dixie is part of the market pulse. Now, the next one we're going to look at is the 10-year treasury yields versus gold. So this is negative TNX versus the gold futures, okay? Now, the reason that this is negative is because this is an inverted chart. So the candlesticks you see here represent the TNX. Now, because this is inverted, Okay, this means that as these candlesticks are going down, this means that the TNX itself is actually going up. And the white line here is actually going to be the gold futures. And so these also have an inverse relationship. Okay, you can see as the inverse candlesticks are going down, meaning the 10-year treasury is going up, what do you see? Well, you see that gold is actually dropping. And then these points here where you see the the white line going up, that is gold, the price of gold going up. And what do you see? Well, you see the inverse 10-year treasury, the inverse TNX going up. So as this is going up, remember, it actually means that TNX is going down. So again, you're seeing these inverse relationships between these instruments. And, this is another reason why we pay attention to the TNX is because it's going to impact the price of gold. All right. Now, if we take a look at the stock market, the treasury yields also affect the price of the stock market. Now, these typically tend to have an inverse relationship again, where we're seeing a drop in the S&P 500 here, okay, and then we're seeing a drop in the inverse 10-year treasury yields, meaning rates are going higher. There was this period here where they were actually moving in unison, but as you can see here, the S&P 500 has been rallying as the 10-year treasury has been dropping lower. Okay, if you look at the dollar versus gold, the dollar also typically has a inverse relationship with the price of gold. Okay, so same way it does with the S&P 500. You can see as gold, the white line is going up. The inverted dollar chart here is going up, meaning the actual dollar is dropping lower, right? And you can see how closely these correlate. Now, it's not always going to be 100% price match for each other, but you can see here that the overall trend of these charts is very similar, where they're going up and down, typically within the same type of movements. Now, this is the S&P 500 versus crude oil futures, okay? And so oftentimes this can be something that can be a negative headwind for the stock market as well. So, it's not as often, but you tend to see these have an inverse relationship as well. Here when the stock market is going down, making lower lows, well, what do we see? Crude oil is over here making higher lows, right? And as crude oil is making lower highs here, the S&P is making higher highs, and we're making higher highs or higher lows here on the S&P, making lower lows here on crude oil. And most recently, we've been making higher highs in the stock market as we've been seeing lower highs in crude oil. Okay, so all of these help to give you a pulse on the market overall, right? You can see how many of these tend to have inverse relationships. It's not always going to be a perfect inverse relationship, but now that you know this information, you can use this stuff as an advantage, right? And basically add this to your list of weapons, right? And trading, investing is really like going to battle. It's like going to war, and so you want to have the proper weapons, as many weapons, and you want to know how to properly use those weapons so that way you can increase your odds of success on the battlefield. Okay. And so that brings us back to our market pulse here. And so with this flexible grid layout, with this chart layout, these 6 screens are giving you a pulse on the market and what's really happening in the market. All right. And so, now the question is, well, how do you use this, Zach, right? What do all of this is fine and dandy, but it's not practical. There's no use. Well, if we take a look here, TNX, okay, right around 10 o'clock here, you can see it had this massive drop down here. Okay, it broke this little uptrend, right? And the dollar at 10 o'clock also broke this trend line here. So if we know that TNX and Dixie tend to have an inverse relationship with the stock market, that should mean that the S&P 500 would actually start to rally at this point. Now, this is 10 a.m. right over here, and you can see that as the TNX had this huge red candle and the Dixie had this huge red candle, the SPY ETF had this large green candle. Now, why is there an arrow here? Well, because to further increase your arsenal of weapons and basically your efficiency in the market, one of my favorite trading strategies is known as the opening range trading strategy, right? And it's not an original concept. I'm not the person who invented it, and it's very common, and many people use this and are effective with it. But essentially, what you do is you're looking for a break, retest of the opening range, and then a push higher. Now, I've created scripts in Thinkorswim that does all of this work for you. All of these charts that you're looking at, whether they were the inverse relationship charts, okay, such as these, All of these are available to members of the Discord, so you guys can constantly monitor these on an individual basis, as well as the market pulse. Okay, and you can simply gain access to these through the shared flexible grids available to members in the Discord. So you don't have to do any of the hard work, right, and chart up all of these divergences and different things like that. It will already be there for you. Another thing that the Discord members get is going to be all of these custom scripts and indicators. So you can see the opening range high is this dashed line right here in green, and the opening range low is this dashed line here in red. And we broke out retest. This was right around 10 a.m. So, with the simple, concept of the strategy, you look for a breakout, retest, push higher. This solid line here is going to the previous day highs. So the previous high of day, often this can be a good target for scalping opportunities. Okay. And so you can see, we retested here and we had a very strong push right at 10 a.m. when we saw the drop in the TNX and also the dollar. So, by combining the market pulse, seeing that, okay, we're getting that confluence here where the 10-year treasury is dropping. All right. The US dollar is dropping, and we're also retesting our opening range. That gave us three, basically signs that, hey, maybe this could be a good long scalp opportunity on the SPY ETF. And it sure was right there. I was able to get about 40% trading options just in that 1 5-minute candlestick right there, and call it a nice day. Now, this was just a brief intro basically into a lot of the metrics that I use when it comes to day trading. So this was focused on the market pulse. If you guys want to know more about the opening range strategy, I've got a video right here. And to really increase efficiency, you also need to know about market internals, which I've got a really good video breaking down market internals right here as well.